Section 13 of the CGST Act, Time of Supply for Services. Wondering when GST liability arises for services? Let's break down Section 13 of the CGST Act in the simplest way possible. It's all about timing, specifically when the GST for services needs to be paid. Let's look at the key rules. GST liability kicks in based on the earliest of these events. When the invoice is issued, if done on time. When payment is received. If the invoice isn't issued on time, it's the date the service was provided or payment received, whichever is earlier. If none of these apply, it defaults to the date the recipient records the service in their books. Extra tip: if the supplier gets up to 1,000 rupee more than the invoice amount, they can choose the invoice date as the time of supply for that excess. It's simple, the earlier of when it's recorded in the supplier's books, when it hits their bank account. For services where GST is paid under the reverse charge mechanism, here's how the time of supply is determined. The date the recipient records the payment in their books or when it's debited from their bank account. 60 days from the supplier's invoice date. If none of these apply, the time of supply defaults to when the recipient records it in their books. For vouchers, if the supply is evident at the time of issue, that's the time of supply. If not, it's the date the voucher is redeemed. Are there any additional charges for late payments? The time of supply is the date the supplier receives the extra amount. If none of the above applies. For periodic returns, it's the due date for the return. Otherwise, it's the date the tax is paid. Section 13 ensures GST is paid at the right time for services. It's all about being fair and precise, from invoices to payments, reverse charges to vouchers. Stay compliant and keep your business running smoothly. Like, share, and subscribe for more GST insights made easy. At Taxes Toolbox. Check the description for Section 13 as per the CGST Act and its summary.